Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert, the Herd, and Lanny, your favorite dividend investors out here in all of social media. We are filming this here on February 20th, and we wanted to bring back a topic to the table just so that it really sticks in your head. Do not wait to buy stocks when they are down and they are blue chip or they are some of your main foundational stocks, because opportunities don't last forever.
Smash that subscribe button. Give this video a thumbs up. Holler at your boys, the
Let's
Dividend
go.
Diplomats. Let's freaking go. We're
Come on,
producing,
guys.
we're producing these videos 5 times a week. Various topics, various contents. We're doing shorts. The goal is to slice and dice our portfolio, to analyze those stocks, help us grow our passive income, but not just our passive income, your passive income. So that's what it's all about.
Yeah, it's all about keeping you guys informed, helping you make decisions, and we are helping ourselves make decisions as well on this channel, as you guys have found out from the stocks we're buying, from the stocks we're selling, and the stocks we're swapping even. But yeah, I mean, there's guys, we talked about it, I think, a couple months ago. I know, a few of those big examples were like Philip Morris, and I can't even remember the laundry list. I think
Oh,
Starbucks was on that list back then. And, again, it's all about when the market is down, which, by the way, Philip Morris is up 25% this year. So damn me. But,
mhm.
the S&P 500, though, again, to kind of recap where we're at, filming this here on February 20th, S&P 500 is up 4%. Now, the last 5 days, it's kind of traded sideways, about 1% change maybe. But we're going to feature three big dividend blue chip stocks that most dividend investors have in their portfolio. And you'll know the price range where the stocks were at, and then now where they currently are at. And the question always is did you take advantage? Did you jump on the opportunity that goes like that? Because as dividend investors, you have to have cash and capital ready. And when they're in your buy zone, you might have to move the chips in.
And that,
Yeah, go ahead, Bert.
I'm saying that's why we run every stock through the screener. We're always in tune with what the metrics are when we're buying. It helps simplify it. It helps take that emotion out of the decision. If it's in the buy zone, if it passes your metrics, and you know ahead of time that the stock is already in the buy box, what's necessarily holding you back? What are you waiting for? Are you waiting for that
What
$2
are you
drop?
waiting for?
Are you that stubborn Italian that's waiting for it to drop 2 more cents to go down? Are you that stubborn Italian that's waiting for it to drop another 3 cents sometimes, and you miss the opportunity when it never does? That's why you stick to the metrics and you stick to the screen.
Yeah, or even an extra dollar. I mean, because you'll see that these three stocks are priced pretty high. First stock, Dividend King, guys, Johnson & Johnson, J&J. Remember, boring stocks. A lot of people have been dumping this stock. We've been buying and adding to the stock when they were in the 142 to 145 range. Now, guys, fast forward to today, February 20th. They
Yep.
closed just under $160 per share for Johnson & Johnson. If you guys remember, they were always hovering in that 143, 144 to 146, 147 range.
Yeah, that lowest price point, January 22nd, was 142. That was where I'm seeing it. So again, to your point, Lanny, in the low 140s, there's a great opportunity. Now up to 159 looks a little different, but let's just share the metrics here. PE ratio is 15. That payout ratio is 47%. That 5-year growth rate, 5.76%. Increase that dividend for 62 years with a yield of 3.11%. Even at this price, still the metrics are looking pretty solid.
Still solid company, still solid price. Obviously, I'm sure you guys would have, could have wanted to buy more if you were in the market at the 142 to 143, 144 range. So that's Johnson & Johnson. Again, one of the biggest companies, huge, 385 plus billion in market cap. Again, we used to call them good old reliable, and they still are. We'll have to see what they do come April, I believe is the month for their dividend increase, to see what type of track record they are on here at J&J. But Bert, that's not the only Dividend King, though, that I wanted to at least talk about right now on the channel.
Nope. Pepsi, ticker symbol PEP. We have featured Pepsi a lot on this channel because Pepsi, much like Johnson & Johnson, Lanny, is still in line year to date, but that doesn't really tell the story with with Pepsi, because when you expand it out in that last year, they were as low as the low 140s at earlier in the year, 142, 143.
Similar J&J price.
Yeah, right in that price range. And you're looking at
4% price
at
point.
The yield is touching 4%. That's exactly what I was going to say. And that's where but Pepsi, the ears start perking up with Pepsi. And now it's a little bit different. The last 5 days are up 3.46%. They're not at those lows anymore, Lanny.
Now there's still some good value here with Pepsi, again, but they're about to break the ceiling of $150 per share. Not to say that the RFK news and all of that was possibly overblown, but Pepsi is now beating and outpacing the market the last, again, only 5 days, but they were actually on the downtrend, pretty hard. And they were falling fast, if you guys
yes.
remember.
Oh, they were falling terribly fast. And there are a lot of people that were saying, is Pepsi done? Is Pepsi done? But they're still resilient. They're still a king. They've gone through different administrations before. They've gone through different health initiatives. They found ways to invest in different business lines. So again, long-term company, dividend king. They know how to manage and grow that dividend.
Yeah, I mean, they still rock an 18 PE, a 68% payout ratio, a 7% growth rate, almost a 3.85% dividend yield.
Mm-hmm.
And again, they're a 205 billion in market cap.
That's number two. Number three, Lanny, let's get some coffee here. Starbucks, ticker symbol SBUX.
Those commercials, I'm going to tip my cap. I actually like their commercials right now.
I haven't seen their new commercial.
They play your music, dude. I think one of them is AC/DC.
Going back to the nostalgia factor. There we go.
Yeah, I think they've got some good upbeat energy going on there. I'm all about upbeat simplification, which is exactly what they're doing, taking things off the menu, making things less crazy for the consumer. They're bringing back the feel good inside of the store, your milk, your honey off on the side. They want to bring it back because that was all removed during COVID and they never got back to it. And now they are. Again, they're bringing back that cozy, come on in to the coffee house feel.
Yeah, and to tell the story about Starbucks, you're going to expand the chart out a little bit longer than just this year. Their 52-week low, Andy, 71.55 was the low point for them back at the turnaround right before they hired this new CEO. Hired the CEO back in August. The stock price jumped up into the 95s. Then in end of December, you had a chance in the high 80s if you really wanted to grab Starbucks again, and you started to believe in the turnaround. And now, Lanny, what's that price now for Starbucks?
Again, guys, this is, we thought it was crazy with J&J, Johnson & Johnson, up almost 11%. Well, Starbucks in 2025 is actually up 23% this year. So again, opportunities in the 70s, okay, opportunities in the 80s. But now, guys, they're at $113.34, up 23% so far in 1.5 months.
I mean, I think that really sums up. And now let's look at the metrics: 38 PE, payout ratio, still looking high at 82% because you need the turnaround earnings to happen. 5-year dividend growth rate's 9%, 14-year dividend increases, and their yield is now back down to a little bit above 2%. Like, you missed your chance to get Starbucks at the 3% yielding mark, which is where I know I at least took advantage. This is the one I actually took advantage of back when it was in the 70s.
In the 70s, we grabbed some shares, guys.
Yeah,
they're 129 billion in market cap, but again, hard to find a blue chip stock like these companies that are actually up this much so far this year or in the last week.
Yeah, so I think that's really what the lesson is. These are 3 examples. Again, there are many. Laney talked about Philip Morris. There's Realty Income now, who's in the 56 range. The overall story is we're not saying buy every slumping stock. We're not saying buy every dog. That it wasn't a successful strategy, and every dog doesn't have this same turnaround story. But when you find one that's down and it checks your investing boxes and it matches your investment strategy, and you think, I want this one in my portfolio, it matches it today, don't hesitate. Just act. Take advantage of the moment when you see the stock at a price you want. If it goes down more, buy more. You can still add more to that position.
And again, do it all in your strategy and your personal finance goals. Fit it all in your framework, obviously. Again, my goal is to get to 50% ETFs, 50% individual stocks. So I'm making sure that I'm not overcompensating on the individual stocks. But if I happen to buy individual stocks, so be it. Then I'm going to have to figure out a way to buy more ETFs to get more into that category, guys. Mm-hmm. So you just always got to stay ready for opportunities, because in the information age with X, with all the other social media channels, stock prices can move fast, and 23% for Starbucks, almost 4% for Pepsi in the last week, 11% for J&J this year. That's a pretty fast movement for these companies.
Yeah, so everyone, share your examples of where this has happened. And we'd like to hear the good and the bad stories. Tell us where you acted with conviction when a stock that was down, and now you're reaping the benefits of it. Feel free to also share with us that time when you were like, I know something good's going to happen. There's going to be a great opportunity, but I'm not buying it for some reason, and then you missed the pop. The good and the bad stories are always great learning adventures for all of us.
Exactly, guys. Remember to like this video, subscribe to this channel, guys, and I got one thing left to tell you. You're either with us or you're against us, Jack. That was Bertha Hurt and Lanny from the Dividend Diplomats. Over and out.